Hey everybody, this is Charles Warner with Innovation and Tech Today, and we are here today with Blake Cohen, the co-founder of Salt. How you doing, Blake?
Good, thank you. How are you?
I'm doing pretty good. We're excited to be here, big crypto event here in Denver. Can you just tell our audience a little bit about your background, sort of how'd you get into blockchain?
Sure, yeah. Well, my family has been in the real estate business in Denver for 3 generations. And I was working for my father, and he also has a consulting company that's done a lot of work for the RTC, Department of Justice, FDIC, HUD. And I had been thinking of emerging markets as a way for that company to be a little more competitive, becoming experts in niche markets and new industries. And that's kind of how I first heard about Bitcoin and blockchain and recognized it as one of these emerging markets. And this is like late 2014.
Okay.
And then like a lot of people who got into it, I had a friend. He posted about it on Facebook all the time, and I said, hey, let me take you to breakfast and explain to me what this is.
Yeah.
So we did that, and I asked him if he knew anybody who had any, kind of entrepreneurial ambitions in the space, and he introduced me to my co-founder Sean Owen and Caleb Slade at that time, and this is March of 2015. And so our partnership at that time was really, they were the blockchain experts. We used this consulting company, Signet Partners, to kind of incubate our ideas. And we just spent that first part of 2015 just, exploring the industry and the ecosystem. And our premise was that in an emerging market, in a market in its infancy, you'll have fundamental products and services that have not been built out or developed. And that's what we were looking for.
Was your initial focus, was it on the crypto side? Was it, kind of that, man, Bitcoin is going to be a big thing and then these other currencies? Or were you looking at the blockchain side of it and the applications there, or maybe both?
Yeah, I think it was a little of both. I think very early on there was an idea that maybe we could act as a consulting group to help businesses onboard Bitcoin as a payment rail, as a currency that they would accept. But I think what we really tried to do is just think as big as possible about blockchain and the technology, and what we believed then was that all value was moving to the blockchain, and any data that needed to be transferred would ultimately move to the blockchain. So, we tried not to limit ourselves. And then this company really, for me, started in a conversation with Eric Voorhees, where we had asked him, or he had mentioned, that he wished he could get a loan backed by his Bitcoin. And I just, my reaction was kind of, maybe Eric doesn't have the right banking relationships. And that was my real estate mind at work.
Right, right.
If you in the real estate business, that's a big part of it is banking relationships. They know you, they trust you, and if you have a project, you can go get a loan. If
Right.
you've got a building, you can get a loan. And then I started to think about it, and I thought, I'm the naive one here. Like if I bring Eric into a bank and say, or myself or anybody, and say, hey, I'd like a loan. They say, okay, well, what's your collateral? And you say, well, here's my $2 million of value that I'm holding on my phone. You're going to get laughed out of the joint. And then it actually happened to Sean. I didn't know that at the time, but that had actually happened to Sean. At some point, he went to get a loan, and part of his balance sheet that they showed him was his crypto holdings.
Sure.
And they just zeroed that out, and just basically ignored that. So I don't know if he got the loan or not, but they didn't take that aspect of his wealth into account. So after that conversation, I called my partners and I said, I think this is the path that we need to pursue. And they agreed, and we recognized that this could be a potentially huge business. That was October of 2015.
Huge.
Yep.
Yeah.
And at that point, we just really began a feasibility study. What are the legal and regulatory hurdles? What's the market depth? What are the tech hurdles that we're going to have to overcome, and pretty quickly satisfied ourselves that this was the direction we needed to spend our time.
I'm sure our audience would be wondering kind of what is the regulatory, not to get too far down into it or whatever, but, is the regulatory state for something like this? Is it ready to roll and they've realized that this is something that has to be, adopted and introduced to the whole rest of the system?
One of the things that I really liked about this idea is that it's not a new idea. Asset-backed lending is tried and true. It's been going on for as long as there have been assets and as long as there has been money. So the regulatory environment for our business model of asset-backed lending is well-formed, and the paths are clear. And the fact that we're lending against a cryptocurrency doesn't really have too many limiting implications.
Okay.
You have to pursue lending licenses in any jurisdiction you want to lend in, and follow some other, regulations which are pretty easy to understand. But because we're a crypto business, we follow and are interested in the regulatory and legislative environment of crypto in general, and really pride ourselves in being part of the conversation and being among the most forward-thinking and proactive when it comes to regulation and legislation. And there was a Senate Banking Committee hearing not too long ago with Jay Clayton, the chairman of the SEC, and Christopher Giancarlo, the chairman of the CFTC. And I think there was a lot of sensible dialogue, and it's certainly our hope and my belief that the regulatory bodies will impose sensible regulations on this. Obviously consumer protection is important.
Sure.
You don't want an environment where there's fraud and unregistered securities. And we all understand that and agree with that. But I think the language was definitely acknowledging that this was a technology and an asset class that was here to stay.
Has the conversation been fairly, which would be a rare thing these days, has it been fairly bipartisan in support of, is there one side or another that's like, we're for blockchain or we're against blockchain, or is it pretty much like it's a solution and it makes sense and they're kind of working together, or?
Yeah, I don't know the answer to that. It feels like it's fairly bipartisan or nonpartisan, if I can say that, apartisan.
Sure.
But I think
something different.
Yeah, something. Yeah. But I do think that the interested parties, and I don't mean political parties, the interested industries. The banking industry is looking at this closely and trying to understand if this is going to hurt them, or if there's any way that they can leverage this to increase their presence. And so that's probably the industry most keeping an eye on this. Central banks are obviously keeping an eye on this to determine whether this is going, how this will affect them.
Yeah.
But it's still up in the air.
Sure.
And it will be dependent on, I think, private businesses and governments to think about this intelligently and sensibly and make good decisions.
So tell us a little bit about the event today. Here in Denver, we've got the D4 crypto, and it's going on. Tell us kind of just your thoughts of what you've seen, maybe any highlights or anything that's really stood out to you today.
Yeah. Well, first of all, I am incredibly proud of our team that put this together. They have done an outstanding job. I have personally not lifted a finger to make this happen, so to show up today and see this going on is remarkable.
That is pretty remarkable. We work with a lot of events, and that's top notch.
Yeah, and I'm also really proud that people have really. I've met people who've flown in from all over the country, and I think that indicates how people view SALT as a company, as as leaders and as educators, and we try to be that. And I'm really proud that people have come here and have really felt like they've gotten value out of being here. And I think our approach to this was really inclusivity and education. Wherever your level is in understanding of the technology and the asset classes, that you can come here, you can learn something, you can interact, you can get a lot out of it. And from all the feedback I've been getting, we've achieved that.
So what? Let me ask you this: what? Because I think in the past year is when the interest from maybe the people on the sidelines has really jumped up, and a lot of that had to do with, of course, the speculation. You keep seeing the cryptocurrencies going up in value, and so the people on the sideline are like, "Wait a minute, let me take a look at this." All of a sudden, I don't think it's a hoax because some people are making some really good money. I guess that would in turn make it a good time for you guys and other solution providers in this industry to come out, because it seems like a lot of people are paying attention now.
Yeah, they are. And when we first hatched this idea back in October of 2015, we felt that we had our timing was really good. 2 years prior would have been too early. 2 years later, which would be right about now, would have been too late.
Yeah.
So we kind of nailed the timing, which is, part just dumb luck.
Yeah.
Right place, right time. That counts for a lot. But yeah, we've been able to develop our company kind of in parallel with the industry. And I know I described the growth of the industry as, it was a couple of years ago, it was fringe.
Yeah.
Now it's niche.
Yeah.
And in a couple of years from now, it'll be mainstream.
Mm-hmm.
And, like I said, the development of our company has kind of paralleled that growth, and we've matured kind of right around that time when, the audience is getting a lot larger.
Yeah, yeah. Well, did you have any closing thoughts or anything else you'd want to just kind of add for our audience here, which is definitely, they're hungry for blockchain knowledge. They're hungry for crypto. We're doing a lot more coverage in the print magazine, on video and everything like that. Any kind of just closing thoughts or anything you'd like to leave the audience with?
I would just say that this is a profoundly paradigm-shifting technology. It's going to affect every aspect of industry, of finance, of record keeping. It is worth your time to explore it and investigate it and learn about it. If you have questions, we have positioned ourselves as a really good resource, both through our blog. If you have questions about what we do, please contact us. We have the first of its kind SEC registered investment advisor that is also, I think, a really interesting aspect of this business, which we'll be happy to answer questions about. So, learn about it and get in touch with us with any questions.
Just tell us briefly a little bit about the platform, Salt, and how it works.
Sure. So Salt is a platform designed to allow holders of blockchain assets to use those assets as collateral for cash loans. Right now, those assets are Bitcoin and Ether. Those are that's where the real demand is. You have a $150 billion market cap in Bitcoin alone, totally unleveraged other than the loans that we have issued. So there's an incredible amount of demand there. And what this provides to the borrower is the ability to realize some liquidity from their favorite investment, Bitcoin, without losing out on the upside of it and without any tax implications associated with selling it. We hear the story all the time. I sold a bunch of Bitcoin last year to buy a house, or I sold a bunch of Bitcoin last year to pay off student loans, or whatever the case is, from businesses like mining operations or exchanges that are constantly having to churn through the earnings that they're making in cryptocurrency and sell these when they'd like to hold on to them. And, in the meantime, they've seen that asset appreciate. And the Camry that they bought last year with the Bitcoin they sold is a Lamborghini today.
Yeah.
And so there's an incredible amount of demand for this product. And that's what we provide to the borrower. On the other side of the equation, you have the lender. And you have asset-backed lending is a business that people look at as a way to get a coupon-driven or bond-like return that's secured by something that has real value. And I think this is very attractive to a lot of people, particularly those who don't want to take the speculative risk of holding a crypto asset itself, but want a kind of arm's length or indirect exposure to it where they can generate some kind of return. So that's the value proposition to the lender. And then how the platform works in order to protect both parties. There are two real aspects of this. One is the custody or the escrow, if you will, of the underlying asset, where it's held in a multi-signature wallet, where the borrower and the lender both have keys, as well as our Salt Oracle, which I'll describe next, and a third-party escrow agent. You can have as many keys as you want, but what's great about that is that the borrower is not just giving away their asset to someone trusting that if they pay the loan back, they'll get it back. They still, are owners of that asset. And if the asset appreciates during the course of the loan, that's their appreciation that they realize. The second piece of proprietary technology that we have is the Salt Oracle. This is the computer brain that monitors the value of the collateral during the duration of the loan. So if a loan is originated at, say, 60% loan to value, you give me $100,000, you give us $100,000 of Bitcoin, we wire $60,000 US dollars to your bank account. So you've got a spread there. If the value of the collateral is declining, the Salt Oracle is marking it to market all the time. And if you hit certain trigger points, say 80% loan to value, you'll get a margin call. You need to put in more Bitcoin or you need to pay down the loan more. And if it hits 90%, then we will liquidate a portion of your collateral, getting it back to that original loan to value ratio. So that's how we protect the lender's principal.
Yeah.
Because cryptocurrencies make an ideal collateral. When you think about asset-backed lending, you're thinking about three things. You're thinking about locate, seize, and liquidate. So if you think of an auto-backed loan,
right,
it's pretty hard to locate the car
because they move.
And they move.
Yeah.
Now some cars are equipped with GPS, so that's gotten a little easier. And then you got seizure, or I guess you got to hire the repo man.
Yeah.
And then you've got liquidate, which can be difficult, and sometimes you have to ship cars overseas. Sometimes you have to part them out. So
a lot of steps.
A lot of steps.
Yeah.
A lot of steps, and that's cost, and that's friction. With cryptocurrency, location is easy. It's in our multi-signature wallet. Seizure is easy. It's in our multi-signature wallet, and per the terms of the loan, we have a right to that. If there's a default. And then liquidation is fairly easy. You have hundreds of counterparties across the globe, exchanges, over-the-counter brokers that you can do business with in a market that never closes. So those three things are ideal. What we had to solve for was the volatility. I described how we did that with the loan-to-value ratio and the margin calls, the automated margin calls. So yeah, that's how the platform works. That's how a loan works.
It seems like what you guys are doing, sort of pioneering in a way, is a way for people to have that feeling of security. Because right now on the exchanges and stuff like that, I think some people feel there's not as much maybe access to make a move when they want to or whatever. There's been times where the platforms out there are like, we're shut down now, come back later. There's been a lot of things like that could scare people away. But because of what you guys have, with the vault, with the Oracle and everything like that, it seems like you're giving them security as well as removing the friction.
Yeah, absolutely. It takes a lot of the friction out of getting liquidity out of that asset without having to sell it. I would like to mention that our platform is not a Bitcoin platform.
Sure.
We look at it as a blockchain and blockchain asset agnostic platform. So what we realized early on was that all value is moving to the blockchain. Traditional assets like gold, diamonds, real estate, stocks are all going to be and are currently being moved to, or tokenized, if you will, so that they can be recorded and traded on a blockchain. And our platform will allow any of those types of assets to be used as collateral for a cash loan, or the loan vehicle itself. So in the future, now you have Bitcoin-backed US dollar loans.
Sure.
In the future, you might use your blockchain gold to borrow and spend Ether. or your Ether to borrow and spend blockchain, a tokenized stock portfolio.
Yeah.
We don't know what those pairings will be. The market will kind of drive that.
But you don't want to play favorites.
Exactly.
Yeah.
And, that'll be an iterative process in determining which assets we support.
Ignorance is not bliss. So make sure that you check out what's going on with Salt, D4 Crypto, and of course, stay tuned with Innovation in Tech today, and we will keep you in the know with all the latest and greatest with all the innovation in tech and especially blockchain.